Gold and Bitcoin are skyrocketing. Have you seen this? Investors are rushing into scarce assets. They're fleeing traditional currencies. The reason? A silent but growing fear: the degradation of fiat money. In recent months, this thesis even gained a sophisticated name: the debasement trade. But what's really behind the movement everyone in the market is talking about? Is this the end of money as we know it, or just another chapter of financial panic? For those who don't know me yet, I'm Chad from Zero Markets, and today we're going to break down simply and objectively why everyone is talking about the debasement trade right now. What does it really mean? And most importantly, how to position yourself without falling into the FOMO trap. To begin with, let's look at the backdrop. Gold has pushed above 4,000 per ounce, and Bitcoin just surged past 120,000 in recent weeks, historic numbers. And this didn't happen by chance. The context is a familiar cocktail: rising public debt, political noise, persistent inflation, and increasingly lower real interest rates. When governments spend more than they collect, and central banks need to print money to fill the gap, investors start seeking refuge. And the result is what we're seeing now: a silent move out of soft money or fiat currencies into hard assets like gold, commodities, and Bitcoin. If you don't know what hard asset means, drop the word hard assets in the comments below and we'll bring you a full breakdown. What's interesting is that this movement isn't purely rational. It has fundamentals, yeah, but it's also fueled by sentiment and a heavy dose of FOMO, the fear of missing out on the next big rally. First things first, debasement trade literally means the trade against currency degradation. It's the strategy of those who believe governments are diluting the value of money, and therefore they prefer to store their wealth in scarce assets like gold, Bitcoin, real estate, and commodities. The idea isn't new. In ancient Rome, emperors diluted the silver content of coins to fund wars. In the 20th century, Weimar Germany printed so much money that the price of bread changed between breakfast and lunch. More recently, Argentina, Zimbabwe, and Venezuela followed the same script. Guys, the pattern's always the same. Governments overspend, they issue debt, central banks will accommodate that, and the purchasing power of money begins to fall. It's a slow, but it's a steady erosion. But what's worrying right now is that major economies are starting to flirt with the same dynamic. The United States, Europe, Japan, all operating with record fiscal deficits, debt above 100% of GDP, and central banks pressured to ease policy just to keep the system breathing. And that's where the debasement trade is born. When investors realize interest rates won't rise enough to contain inflation, they seek protection outside of the system. Are you following the thread? Stick around, we're gonna make this even clearer, guys. There are two ways to interpret this move. The skeptical view: this is all noise. Gold and Bitcoin are still relatively small markets. Gold is worth around 16 trillion, but trades only 150 billion per day. Bitcoin has a 2.3 trillion market cap with about 50 billion in daily volume, meaning even moderate fund and retail flows can move prices. Now, much of this rally may be hedge repositioning, not genuine panic. Long-term yield curves aren't screaming collapse. And of course, there's FOMO. Not necessarily a solid macro thesis. The alarmist view: smaller markets react first precisely because the rest of the system is locked down by politics and bureaucracy. Rising global liquidity via debt rollovers and monetary stimulants inevitably spills into scarce assets. Long-dated government bonds are already showing pressure with higher term premiums and steeper curves, signs that the fiscal bill is getting heavy. In short, it's not the funeral of fiat money, but it's not just noise either. It's a fear thermometer, and fear in markets has power. 3 years ago, anyone defending gold and Bitcoin as protection was labeled apocalyptic. But history proved that caution had merit. Since then, gold has risen more than 120%. Bitcoin has appreciated more than 400% in diversified positions. Why? Because post-pandemic fiscal and monetary policies were the most expansionist in modern history. Governments injected trillions into the economy, doubled their debt burdens, and created an environment where easy money became the norm. The consequence is what we're seeing now: a generation of investors trying to correct the excess, buying protection after the storm. And when a thesis becomes a headline, it usually means the narrative has already priced in the fundamentals. The debasement trade is a structural thesis, not a short-term trend. So how do you act without getting swept away? Number one, don't chase the narrative at the top. Stories move prices, but profit goes to those who arrive early. If you heard about the debasement trade on TV, the market has probably already reacted. Number two, align thesis and time horizon. Currency degradation is slow, guys. Treat gold and Bitcoin as long-term hedges, not all-in tactical bets. Build exposure gradually and adjust as your conviction grows. Number three, remember, hedge, don't hero. Gold doesn't pay interest and tends to underperform productive assets over time. Bitcoin is asymmetric. It can soar, but can also drop violently. A little protects, too much exposes you. 4, don't expect universal salvation. If liquidity dries up, even hard assets suffer. They're not safe havens for every scenario. They're partial anchors against momentary erosion. Number 5, have a method, whether with multi-scenario portfolios or momentum strategies. The key is to codify rules and stick to the plan, even when the market sentiment tries to hijack your rationality. The debasement trade isn't a bet on the end of the world. It's a rational reading of a system that keeps pushing risks into the future. More people seeking scarce assets outside the system is a real signal, but part of the movement is amplified by narrative and sentiment. Discipline is the best defense, guys. Build early, size correctly, stay methodical. If it's just a fad, you don't lose. If it's the beginning of a new era, you're protected. The debate around the debasement trade isn't just about gold and Bitcoin. It's about confidence, politics, and the real value of money. If this video helped you understand why the world is looking at currency degradation with so much fear and fascination, subscribe to the Zero Markets channel to keep following how global economics, technology, and behavior shape the future of investing.